Macroeconomics as of October 2020. Welcome to this Critical Point podcast update on the economy. It is November 6th. Now, today we got the monthly jobs report as of October, and we can see we're looking at the Fred St. Louis Fed Reserve site here, and this is all employees, total non-farm, and we can see we've had a spike up here in jobs, so that's appreciative. Now notice this trend from basically, I'll say, the 1930s, even though the chart doesn't show it. Well, actually, I guess it goes back to 1939. But from the Depression to today, we can see the supercycle trend is up. Now that trend probably will end in 15 to 25 years here, so I do see the chance for the first depression since the 1930s. And a huge surge in unemployment, not necessarily any more than what the unemployment occurred for this virus recession, but the point is it may be a greater struggle to recover from it because it won't necessarily be engineered, man-made, whereas this virus recession, we did it to ourselves by shutting things down. Therefore, by opening things up in the economy, we're able to recover faster than what you would normally expect relative to business cycles in the history of business cycles. At any rate, it looks like we've put in a major long-term business cycle low for employment, and the trend is up. And I think it's going to continue up into late this decade, and someday we will get to record large employment build here, but not necessarily in just the next few years. But I have no idea how fast or how slow it will be. But anyways, a nice report today. It was up like 688,000 jobs or something like that. All right, now I want to switch over to unemployment. Actually, it was 638,000 jobs, and I forgot to check and see whether that was near expectations or not. But I know on the media side of things, they're saying strong job creation in October. All right, this is your percent of unemployment. And these gray bars are economic recessions, according to the Federal Reserve. And in my opinion, they got them all right. And most of those recessions, not all of them, but most of them relate to the major long-term business cycle. I also call it a 9-year business cycle. It's actually 8 to 13 years, meaning every 8 to 13 years, you're going to see the lowest of unemployment, okay? But that's going to relate to peak economy, and you better look out. The next recession's coming. You could lose your job. You could lose your business. You're certainly going to lose something in the stock market, okay? Now, flip it the other way. Every 8 to 13 years, you're going to see the highest unemployment compared to the last 8 to 13 year period. In other words, in between those 8 to 13 year periods, you will see unemployment come down. Okay, and so it's a peak, it's a top. Well, that will coincide with a recession, okay, or at least it always has. And then the recession should be over and we start rebuilding. Well, we've slammed this to record high since the Great Depression, okay. Unemployment by itself, yes, we were in a depression, but when you put it into everything for the economy, no, we're not. It was another great recession. And depressions normally can take many, many years to get out of, things like that. Any rate, beautiful drop back here. It's dropping at a much faster than a normal pace, and that's just because it exploded much faster. And again, we did it to ourselves, and we knew we were doing it to ourselves. Whereas if you look at all the other recessions, quite a few people and businesses got caught off guard. They did not see the process building, and then it blew up on them, okay? Totally different characteristics. At any rate, the weird thing is totally different characteristics, yet it's happened at the time that we were due for a major business cycle top, therefore a recession to occur, and we've got it, all right? So the next low for unemployment is probably due near late this decade when we're due for a peak in the economy, we're due for a peak in the stock market, and for you beginners, peaks mean it's going to stop going up. It's going to go down, okay? Bottoms, troughs, lows means it's going to stop going down. It's going to go up. And in cyclical terms, what we do is measure some types of patterns that seem to bottom every so amount of time, okay? In other words, in this case, the economy bottoms every 8 to 13 years. So it is bottoming. It's in that time frame. And the next several years, we should see unemployment come down. We should see the jobs number improve. We should see total employment improve. And eventually we'll get down to full employment, which is probably, it might be 4%, a little above 4%, but I think most people these days assume below 4% would be full employment. So it's probably coming back to 3.5%, and it's currently at 6.9%. So we have some work to do. Now, it's quite possible in the next several years the rate of decline here is going to slow. There's going to be a struggle getting back to full employment. We don't know. It's possible this time around we get to full employment at record pace, and then we just stay at full employment much longer than normal until we get into the late part of the decade, and then you're going to see employment explode again for the next recession. And then we're going to do that same process again in the late 2030s, later 2040s, when we could see an explosion like what we're looking at right here, only it lasts longer, may take longer, and we can get into the first true depression since 1930s, believe it or not. And it's fairly high confidence and good probability right now. At any rate, today, however, we have a bit of hope here. Yes, there can still be problems and complications through next year, but my guess is 2022 on into 2028, you'll see a rising stock market, you'll see economic growth, you'll see better employment. We're going to be okay. But for the first time in 40 years, we're probably going to see a rise in interest rates and a rise in inflation, which can mean something different depending on how you are employed. What sector of the economy are you in? And it can mean definitely something different over in the stock market. And we will discuss these things ongoing in all my different podcasts here. All right, that's our scenario. It's looking good for us. A thumbs up as of October. And I think we're on our way to eventually get back to full employment and the lowest of unemployment later this decade. At any rate, this was a good report. The stock market in the past few minutes seems to be selling. I think they've already dialed in this good report and saying what else is going on. Thank you. Have a great weekend. Stay safe.